All right, traders, I am back again with another video, and in this video, we are going to look at a few pairs. Um, what we want to do always, though, the first thing I always tell my traders that trade with me is that you need to look at the news every day. So every morning when you get up, so the first thing you should be looking at is the news, not your trading charts, because you need to know when there's news and understand how that news affects your trade. Because if you get ready to get into a long trade on, say, the pound, and there's news at 2:45 p.m. and you didn't know that, and your trade goes out the other way, then that's because you didn't know that there was news. All right, and that news affected your trade. Now, it could affect it in a good way, or it could affect it in a bad way. So you don't want to take that chance of it affecting you in a bad way, and it could be a very bad way. All right, so you don't want to risk that if you don't know how to trade the news. So what we basically do is know when there's news, and we don't trade during those times, or else we tighten up our stop loss pretty much, but usually we don't trade. So I like to talk about the news real quick. When I hold a session, we have our weekly webinars. So we'll have a webinar session. It's called Ichimoku Live at 5, and we always start out just like I'm doing here today. So I'll start out with the news. So I want you guys to look at this. When I talk about the pairs, I'm going to be looking at 5 currency pairs today. So when I talk about those pairs, I want you to understand that you need to look at the news and make sure there's no news when the trade becomes into progress. All right, so let's get looking at this news. So we see there was news today, which is Friday. The day's getting ready to be over in another 45 minutes. So we had CAD news today, and I'm going to look at 2 CAD pairs. We're going to see how the market was affected by those pairs, by that news. So keep that in mind. So let's go to next week's news. All right, so I'm only concerned with the high priority impact news right here, the red news, all right, because that's the one, those are the ones that are most likely to move the market. So what we have here is Monday, 9 a.m. with the euro, and then we go to Tuesday, 8:30 a.m. with the US dollar, 10 a.m. with US dollar, and then 7 p.m. with the New Zealand dollar. And then we go to Wednesday, 8:30 a.m. with US dollar for 2 events, and then 10:30 a.m. with US dollar for another event, and then 7:30 p.m. with the Aussie. And then Thursday, 4:30 a.m. with the pound, 10 a.m. with the US dollar. And then we close out the week on Friday with tentative schedule for the pound with Prime Minister May speaks. So that'll be tentative schedule. We don't know exactly what time that'll happen. I don't trade much on Friday, so I'm pretty good to go. 4:30 a.m. with the pound, and then 8:30 a.m. with the CAD. All right, so that's the news. So I know you guys want to get to the charts, so let's get right to these charts. All right, so the first chart we are going to be looking at is the Aussie New Zealand dollar. So a lot of traders, probably a lot of people look at me as an Ichimoku trader, but the market is not always trending, and it's not always in an environment that's conducive for good Ichimoku trades. So sometimes you have to know how to trade other things. I consider myself more of a fractal price action trader, okay? But Ichimoku gives me the main bias, and I get a lot of trades off of Ichimoku, especially in a trend. But I could still trade without Ichimoku. But Ichimoku helps you to lay down solid rules that you want to look at. Solid. It sounds like I'm saying salad, that the salad that you eat, right? But it's solid, a solid foundation, solid rules, and helps you to learn that discipline. All right, and I think all traders need that. So what we're looking at here is the Aussie New Zealand dollar. So when we look at this Aussie New Zealand dollar, we're looking at the daily time frame. So I like to look at the daily and then try to go to the 4-hour to get a better trade entry if possible. So you could see I use also on the bottom here, I use this what we call the ultimate oscillator. I like to use it for divergence. I believe it's the best tool for divergence because it shows you divergence based off of 3 time frames. It's looking at the short, mid, and long-term time frames. So it helps you to it locks down the divergence a little bit better. You could see it a little bit better. It shows divergence when others don't. All right, so looking at this, we see we're in a nice move to the downside. Now we broke this level here. We were kind of flat. So I got this level at 108,434. So what I'm looking at now, the market, we do look for the market to come back to that level, but we've already passed that. So we got a TK crossover that's bearish. Our cloud is bearish. Sequel span is bearish. There's nothing hindering price from moving to the downside. And there's slight bullish divergence, which I don't believe would stop us from going down to the lowest levels. This is where we're looking to the market to go ultimately. All right. But when we start putting on support and resistance levels, we want to see where we are, because we put these levels on here. We want to see how the market's gonna act at these levels. So I put another level here at 106, 158. Okay, so we're currently bouncing off of the Tinkinson. So in a trend, we really want to trade the Tinkinson bounces. So the market's bouncing off of the Tinkinson level. So the market comes down, bounces on this level. Now we have roughly what, 40, maybe not even 40 minutes. We got 37 minutes before this market closes. All right, so with this market closing, this strong bullish candle reaching up to Tinkinson is a big deal, because now we want to watch and see what the market's going to do after that, because for the trend, when we're trading the trend, we look for bounces off of Tinkinson. So we like to see the market, in the market, if it's a strong trend to the downside or upside, like here. So looking back here, you can see this was a strong trend to the upside right here. Boom, boom, boom. The market never comes lower than Tinkinson. It bounces off Tinkinson. So when we started the trend, we came back to Kijinsen. That was building up momentum, but then from that point on, we never came back to the TK zone, which is this, your Tinkinson, Kijinsen. And then finally we violated Kijinsen, then we had another little short run to the upside, but then that was the end of everything. It started to go sideways and fade away. That trend was over with. All right, so in a strong trend, you're usually not going to see the market come past your Tinkinson level too much. Right, so therefore you like to get trades off of this level, and that's how you use Ichimoku. Basically, you look at your bias and you use these levels to get trades. So when I teach traders how to trade this thing, we talk about LST, level, signal, and trigger. So I'm getting ready to tell you about that right now. I'm getting to tell you a little bit right about now. So some of the things we talk about, I don't show everything that I do here on YouTube, because I'd be here forever, but I don't trade the ways that I'm showing you. I incorporate a little bit more. So fractals are main in my trading, all right, especially in a trend. So I'm gonna focus basically on Ichimoku. I don't really talk to you guys much about fractal trading. I'm staying basically with Ichimoku because that's what you guys like, and that's what everybody thinks I do, is trade Ichimoku. But fractals are major. But when we're looking at this, the market's moving to the downside. You have a couple bounces off of Tinkinson here. Now, I don't like either Tinkinson and Kijinsen getting flat, because especially Tinkinson, you don't want to see that thing getting flat, because when that flattens out, what that means is you lost momentum in your short term. All right, so you got a little bit of bullish divergence here, and the market's still moving to the downside. You can see here. Let me draw that out real quick. See where that's going to the downside, and see where that exact area is going to the upside on the indicator. They should be the same. But now divergence can last quite a while. So this market could move, keep moving, and move past that level before the divergence kicks in, all right, and moves to the upside. Now also, let's erase that. And then also, I think like divergence could even last till the market gets down here. All right, so I don't trade divergence. I use that as like what we'll call a high probability enhancer. All right, so it's just a probability enhancer for us to give us a higher probability of our trade working out. All right, something else that we could look at. Now, I don't want too many things to look at. I don't want more indicators. I don't need anything more, because I want to trade the facts right there. Boom, 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 and that's it. I don't need 4, 5, 6 other things to tell me, because then you start having more confusion. All right, and then next thing, one thing's telling you something, something else telling you another thing, then another telling you. So if I had 2 people in a room, just me and myself, myself and another person, right, and we were asking each other, well, what should we do? And we said, one of us said we'll do this, and the other one said we'll do this too. So we got 2 things confirming. If we have another person in there, so we have 3 people, and 2 of us say do one thing and the other says something else. Now we're confused, right? Then we have 4 people in there. 2 people say do this and 2 say do that. Now you're really confused because you don't know what to do. That's basically like it is when you add more indicators and more things on your chart. It gives you more stuff that you have to account for and answer to. So you don't need to do that. But now looking at this, so we're looking for the market to bounce on this Tinkinson level. So we need to wait now. So what we have is our level. We still need a signal and trigger. So if you don't know all the signals and triggers, there's a bunch of signals and triggers. And if you were in my course, if you take my course, you can learn all the signals and triggers. And some of them are very obvious, and some of them are pretty basic, and some are very a little bit more detailed. But looking at this, if we bounce on this level, we need a signal now, because we have our level. Now we're looking for a signal and then a trigger to take us to the downside. So a signal would probably be, and we're looking on the daily time frame, it's probably going to be another another day or so before this trade kicks in. Now it could be the very next day, but I don't think so. So what I like to do is go down to the lower time frame, the 4-hour time frame, to get into the trade. So I'm looking to trade short off of the bounce of the key of the Tinkinson level there. So when I go to the 4-hour time frame, 4-hour, if you look at the 4-hour, there's a couple things that are really good that are helping me to decide that I want to get into a trade. So I love to use this for divergence, but I like to use it for hidden and normal divergence. But the hidden divergence is usually used for a trend. So let me show you some things. All right, so we're going to go over this real quick. See this divergence right here? See this? These 2 points. I use these fractals to look at the points of the market. How come this is going to the upside, right? And this is still going to the downside at resistance. All right, big sign. When we break this level with this indicator, with this ultimate oscillator, breaks that previous high, that's a sign that this is a false indication. There's weakness and the market moves to the downside. That's what you got there. Market come and it moved right to the downside. All right. So you see that. You see this level, which is this level, and this level, which is this level, gives us hidden bullish divergence at, let me show you, at resistance with this cloud. We're right at the bottom of the cloud. All right, and with that resistance, what does the market do? It drops to the downside. All right, so that's a big sign. That added to my more than what I already had. So I had my level, signal, and trigger and divergence, hidden bearish divergence. So now when I look at this chart, I see the same thing at this point, right? And this point, and I have this point. So now we're at resistance again. Now I just want to see a signal and trigger, and I feel like my trade would be good to go back to the downside. All right. Now always you got to get past that previous low in order for the market to continue. Now this is the 4-hour time frame, so we should be able to see it get past that level, but there's there's no regular divergence. So when I look at the market, there's going to be 2 types of divergence, hidden and regular. All right. So for the regular divergence, that's just like for a reversal. So there's nothing to show me that the market's going to reverse and go to the upside because it's going to the downside. So there's nothing to show me that. All right, so I'm going to continue to trade to the downside, especially that hidden bearish divergence that we're going to trade and look for the market to move to the downside. But I think you got, so this is going to close at this time. So what I would look at here is basically, let me move this in tighter. What I would look at, okay, so I want to see the next candle really, but basically if I want to start seeing the candle close below this low here, then I would take my trade to the downside and put the stop loss a little above this level right here, because if the market closes above this point, that's where we're signifying that it's going to go even higher. Now I could still be wrong because the market could go all the way up to this flat cloud here, which is resistance, but we're starting to see a little bit of signs that the market's starting to hold at this level. All right, so when we go back to the daily again, remember I talked about hidden bullish and bearish divergence and then regular divergence. So now here's regular divergence. This is going to the downside. So regular divergence will kick in and it's a reversal. So this is going to the downside. So let's show it. Going to the downside, and this is going to the upside. That's regular divergence. All right. So when I was looking at it previously, I was looking at these highs. All right, because I want to see these highs doing the same thing they are there, see? And then here, you see? So the highs are the same pretty much. Now you got a little bit of difference here. Could call this the same basically. All right, but this one was going lower. And then it went even lower. So that's when these two line up straight together, much like this, that signifies regular divergence. And then now here, for a reversal at the support level, that signifies regular bullish divergence. This is regular bearish divergence because you see this going to the downside. This is flat higher than that, or the same level. All right, but when I was looking at the 4-hour and I showed you continuation, because I don't think the market's stopping here. I think you're going to see it go even farther. Now, things that you want to always pay attention to when trading Ichimoku. Some things traders probably never even tell you. First of all, one of the things is you don't want to see Tinkinson and Kijinson getting this far apart. And you don't want to see price get too far from Tinkinson like it did here. Not super far, but it's getting far. But when Tinkinson and Kijinson are far apart, then these two are like, these are lovers. They love to be together. They're mates. They don't want to be far apart. And as they get far apart, eventually they're going to come back together. The market has to move back into equilibrium because as they get too far apart, the market's out of equilibrium. All right. So they want to get back together and get themselves going again and get everything back to normal. Here things aren't in normal. So we need to see this candle close on the daily time frame, and then we probably get to see the next candle. So when I tell about trade setups, a lot of times here's what people do. My trade setups, I'm trading a daily time frame and a 4-hour time frame. Sometimes they don't happen right away. They don't happen that day or the next day. You have to keep looking and keep it in mind and wait for it, because sometimes price takes a minute or two to react and then do what it's going to do, and then finally we see it. If it doesn't happen right away, you tend to forget about it, and you just forget about what I told you and let that go, and you miss the whole opportunity. So you don't want to do that. You want to put alerts on your chart, and you want to remember the things that you're looking at, come back to check that chart again, and so forth. So with this, we could see we're waiting on the bounce here to see what's going to happen, and we'll trade this back to the downside. And we got targets. We'll distinguish that even more once we see what's happening. So if we basically get that entry here, depending on how high the market goes, we'll put it at this top fractal right here. All right, put our stop loss a little above that fractal, and then see where our entry is going to be based on the price action, and then we'll shoot for our targets. We'll shoot for this target first. You always got to get past that low or high, but then we'll go past this level, and then we'll see where we are then. All right, so let's just wait and see. We'll see what goes on, but looking pretty good. All right, so we're going to get off of this pair and move on to the next one. So let's get it going. All right, so we're looking at the CAD Swiss franc on the daily time frame. So we had news for the CAD, and you can see what happened. I think this was probably all just news related. So that moved this market higher than the previous candle pretty much. But we're right back at Tinkinson again, which is vital because you get a lot of bounces at Tinkinson, like I said. And I don't see, well, actually, yes, there is divergence here. So we want to see if there's some support and resistance levels, because really I don't pay much attention to the divergence until we're at support and resistance levels, and I don't trade the divergence. I still trade the LST. So with the LST, I don't pay a strict, I'm not just looking at divergence. I need my LST, and then I'll trade the divergence. So now when we look at this, also take note of the cloud and stuff. All right, so when you see this right now, this is sync out span A to the downside, and this is B. If that span B is flat and it stays flat, you see the market do something like this. So we talk more about some of these patterns with the cloud in the course, okay? So I want to show you one of the things that I look at. So a lot of times you'll see a flat B. This is when we're on a downtrend, and then you'll see A start to roll over, and then when that thing starts to roll over, if that market's still down, then we'll see it go just like this, and that's where we start our trend. Now again, this is slower than the price. So price is starting to already do what it's going to do by the time all that happens. So therefore you can't just look for that. But that's helps you. That's a signal that you could also look for. All right, but see, you had a bullish engulfing here, but I believe that was just news related, but you do have a little bit of divergence, as you could see here. So divergence again doesn't last, could last for a long time. All right, so we want to see if there's any support and resistance levels, because basically this is still a good Ichimoku trade to the downside, because you got angulation on your midterm and your short term, and your cloud has a little bit of angulation. You're flattening out here, but we want to see if we could keep that move to the downside. All right, so let's look at a couple things real quick. So we need to see where the next support and resistance level is. Obviously, I'm going to put it at this flat cloud right here. So when I put it at that flat cloud, you can see where we are. All right. Now, I still think that the news drove this, so we may see the market go back to what it was doing, trending to the downside. But then you look here. When I marked that flat cloud, you could see where that thing was, a little bit of resistance here, support here, a little bit of support back here. So that level was a strong level, pretty much pretty much a pretty good level to base it on. And you got divergence here, so you could see this probably get a correction, a pretty good correction. I'm still going to shoot overall for the market to move down to this level at 71,381. Currently you're looking at that 73,611 mark for some support in the market to move higher. Now, with the market still moving to the downside and we haven't broken any levels, we'll still stick to the trade to the downside. So we need to see this close within, it's going to close in the next 8 minutes or so here. And then we need to see what the market's going to do when we open up. Now I go to the 4-hour time frame to try to get into a trade. So 4-hour time frame, no true divergence for me either. All right, so what I'm looking at here, we still have resistance on the cloud and we rejected that level pretty well. All right, so we want to wait and see. Just got a little bit of time. Can't always find, you don't want to go out and find a trade, look for a trade. You want that trade to be obvious and come right to you. This one's not obvious yet because we need to see what's going to happen at Tinkinson level. I don't like getting that distance either that we're getting. We don't want to get that wide split that starts to get too much. You get a correction, then the market goes back your way. All right, so think about that. That's going to be it for this pair. Pretty quick. Don't have a lot to talk about on this one. So we'll move on, look at our next pair. All right, so let's go on and look at the New Zealand dollar CAD. All right, so we are back here with the New Zealand dollar CAD. And again, like we said, we had CAD news, so you can see what happened here. But I think the market was due anyway for a pullback here because we were getting a little bit of distance. We were getting extended a little bit. Now you can see you got a flat Kijinsen here. We want to see, I mean, seeing the flat Kijinsen isn't so bad, but I don't want to see a flat Tinkinson because that's the momentum right there. You could see there was no momentum right here. And then the market took off. They both were flat here. Everything was flat, and the market was trading inside the TK zone. So inside the TK zone, you don't really want to trade in there because, I mean, you could take a trade at the bottom of the zone, but while the market's inside the zone and it's not stable, you really don't want to trade. You want to wait till it breaks outside of the zone. So we came inside the zone here. We may even move a little bit closer to the Kijinsen. So you may get a bounce off of the Kijinsen level. But this candle closes in like roughly a minute or so. All right, so when it closes here, yeah, it looks like we got 2 minutes, a little less than 2 minutes. You see, there's your time right there. But anyway, if you look at that, you can see we probably close inside that TK zone. So we may see the market in this area. So if I put a line here, let's put this level, let's do this. So this horizontal ray is going to represent the daily Kijinsen level. So that's your daily Kijinsen level. All right, so you're inside the TK zone right now. So if you go down to the lower time frame, we're going to look to see to get into this trade. Now, there's not a lot of divergence here. So there's some divergence here, but I think we could still see this move to the next support and resistance level. And what is that level? So I want to mark this level because it's a flat cloud that's going to represent some support and resistance. So let me mark one more level because that flat cloud right here. So we got kind of like a zone with this flat cloud level right here. So we could see the market move up into that area. If you go back, a lot of withdrawals and spanks on that point. So let's go see if we move back up into this area. I think we could get a trade that moves up to this point before the overall divergence kicks in. Now you don't have much divergence from this point. Now if we look from here through, we have divergence. That's a longer set of divergence. So I think we could see the market kind of move here. So we're going to look for the bounce off of this level and trade to the upside. So again, this is a trade that's, I don't see it happening in the next day, the next market open. But if we go to the 4-hour time frame, it may signify otherwise. So let's go to the 4-hour time frame. What happened to my time frames here? Let's do it this way. The market just wants to be crazy with me, right? So when things act crazy, you just gotta do a little different. So we switch the time frame, we go 240, right? So when we look at 240, you could already see. So there's our daily Kijinsen level. So we want to see the market still might come back down to that level. Now you could see we're rejecting this cloud level here. So to me, more than likely, if we could, currently at this point, I would wait for a close above this level right here with a stop loss down below that point. But there, it may change within the next couple fractals. We may get the next couple candles. We may get a better opportunity lower here. Now we could wait and watch the market and see when it closes outside of the cloud level just for a Kumo breakout, but that won't be, you still won't have signals that are conducive for Ichimoku because Chiku span will be below price. Alright, so we want to wait here, see what the market gives us, because I think at this point I would enter here, but I think we may get a better entry with the next few candles, so we'll have to wait and see. But I'm looking for it to move to the upside here. And I'm basing everything off of the daily time frame. So when I look at that daily, I just look at that daily and get my bias. Now it is moving to the downside, so that's why you see a difference on the 4 hour, because you had this big drop here. But I think you're going to get that correction in this area and then back move to the upside. So that's what we'll look at for New Zealand dollar CAD. All right, and let's move on. Let's move on to the US dollar won. We'll look at that pair. Alright, so we are looking at the US dollar won, and let me show you, this doesn't have a great setup yet, but I think there's a possibility for a really good setup here. And I think we'll see this move to the upside. You can see there's some serious divergence here. This is regular divergence, so let's draw this out. This is regular divergence. And then you could see where that started pretty much back here. This was still going to the downside. So see how long that lasted? That's why I tell you guys, divergence, don't trade it, because it can last for a long time. When you do trade it, you want to be at support and resistance levels, and you just use that as something that enhances your trade. So I'm looking for the market to do this move now, to move to the upside. But you can see I have it boxed in here at these levels. So I pretty much have this market boxed in. I'm not really concerned about it until it does one of two things. If it drops back down to this level, I'm going to look to trade the move to the upside. All right. But if it doesn't drop back down to that level and it can't go, it stays in between this box here. When it closes outside of that box, I believe that signifies the move to the upside. All right. Because of the divergence, the flat cloud here, you got some distance, which is volatility. And that's all represented right here. You could see that. And then eventually we'll probably see this thing move to the upside. So that's what we would be looking for. So with this, I wouldn't trade anywhere between this point and this point. But when it gets to this point, if it does, I would trade it long. And when it leaves this area, I would also trade it long. All right. So that's what I'm looking at with this. So if I go to the 4 hour time frame, and let me show you something. We use, when this market was way back here. All right, we were using Ichimoku, has 3 other theories, all right, that you need to learn to really trade it fully detailed. So time analysis is one of them. So we were using the time analysis here to catch a trade, and sure enough, that time analysis, almost like the Gann theory, helped us to get into a trade to the downside with a pretty nice move here. And then if you continue to trade the way that I'm showing you, you'll see that you got bounces off of this Tinkinson level. So people don't understand, it's not just looking at these kind of trades for Forex. The same thing, I've traded stocks with this, cryptocurrencies, a lot of options traders I know doing the same thing, commodities, everything. So, and it's the same technique throughout, right? So if you learn this and understand it, then it'll really help you with trading anything that you do. So that's what we're looking at here. Currently, that's not an opportunity per se, but it's one that you want to keep your eye on, because I think that'll be a pretty good move. So we'll go down to the 4 hour time frame real quick. So 4 hour doesn't really give me a good move here, but it looks like we're getting a bounce off of this lower level, and then we could see the market break out of the TK zone. We dropped below that Tinkinson level here. You could see the market's pretty flat. So we want to see the market start to show and break levels before we really get into a trade. Not much divergence here, so nothing to really put our hat on. So not a super great opportunity yet, but I think this is one that I'm going to be watching for next week for a good opportunity. Now, the same thing is this thing could stay in here in range for a little while before it breaks that upper point, but you just have to be aware. All right, so just keep your eye on this US dollar won. All right, so let's move on. We got one more we're going to look at, US dollar yen, and then we'll be done with this. All right, traders, and this is the last pair that I will be looking at, the US dollar yen, but I'm not looking at it to really show you an opportunity because we've already had the opportunity. So I put a video out on YouTube, and that was, I think it was the beginning of last week. But anyway, you could see where when we talked about the US dollar USD JPY trade and parable. So I talked about this trade at that time, and I told you that this rejection at this level, because we were paying attention to this level here, and the market went down just a little bit below that level, and we had a nice little rejection, and I told you my entry was here. I got out of this trade exactly right here. So we expected the market to pull back, but now there's some divergence. So I think overall we may see this start to move to the upside. So I'm going to pay attention to some levels before I really decide what I want to do to with the market here. So my thought was that we would see the market possibly move back way down this to this level, but it looks kind of weak and like we may see it turn. Some things that concern me are the cloud flattening out here and then the volatility on it. So it's flat and then you start to see it roll over and the market moves higher. But then I don't know if we're going to break these levels and then see the market eventually come back down here and hit this point at some time. But currently I don't really see, there's no opportunity for me right now to trade. I'm not looking at the trading opportunity. Just wanted to show you guys the trade that we talked about last week. So go back on YouTube, look at my page and look for the USD JPY trade, and we were right here. I talked about it and I figured we'd catch that pullback, and I said we'd catch it back to Tinkinson level, which was right here at 107,643. I got it exactly on this candle right here at the full profit. I got 100 and I think it was 137, 117 pips, because basically there was news coming up that day, so we wanted to get out anyway. So we made the full profit there, and then the market dropped as we thought it might do because it's still in a downtrend, and until we see something to let us know that it's changed, and we haven't seen that yet, but there are certain signs we'll be looking for, and we'll just watch and see what happens, and then we'll make our decision on what we want to do then. But yeah, just wanted to look at that, show you guys that yeah, we did look at that trading opportunity. So go back and look at my video, US dollar JPY parable. It's probably a couple videos prior to this one, and you'll see that we talked about this trade. All right, so we're putting some trades out here, not a lot of trade setups for you guys on YouTube, but we'll try to get some out there. Got a lot of members and just trying to keep things good for them and make sure they're happy, and then make sure you guys are happy. So we'll see what we can do from there on. All right, but hopefully you guys are enjoying this, and till next time, have a great one. God bless.